I think fee compression is something that we're all going to have to deal with, and you better have a very efficient, lean, well-run machine in the next 3 to 5 years. When the markets finally do break and we have that inevitable correction that we know is going to happen, I think the Robbie the Robot portfolios of the world, I think all of a sudden human advice will come back into vogue.
Between Now and Success is brought to you by the ROL Advisor Program. ROL Advisor is a technology and training platform for financial advisors that empowers you to deliver life-centered planning. To learn more, visit roladvisor.com. Hey everybody, Steve here. I just returned from Chicago, where I attended the Schwab Impact Conference. Now, this conference marked the 30th year of Schwab providing services to independent advisors, and Schwab invited me to facilitate a panel discussion with 3 distinguished guests. And we talked about their experience over the past 3 decades and what we can learn from their experience in terms of what we need to be doing going forward to be successful in the future. The 3 folks on the panel were Tom Meyer, who is the CEO of Meyer Capital Group. His company was founded by his grandfather in 1963, and Tom joined the firm in 1982 and serves as the CEO today. Stephen Kay is the CEO and founder of AEPG Wealth Strategies, which is a company he founded in 1980. And Jelena Kerr is the Vice President, Client Experience, Schwab Advisor Services, and she joined Schwab in 1994, and she is a 25-year veteran of the financial services industry. In our conversation, we touched on a wide variety of issues, including how they survived the October 1987 stock market crash and the advice that they have on handling the next bear market. We talked about how they use technology in their business to make them more efficient, how they hire and manage people and build a high-performance culture, what it means to be the CEO of a leading RIA firm, how to create a client experience that becomes a true differentiator for your firm, and much more. What was also really interesting about this conversation is we have 2 really successful financial advisors who have been in this business since the early 1980s. So these folks have seen the October 1987 stock market crash, the technology boom in the late 1990s, the resulting bust in the early 2000s, the next real estate bubble that we had in the 05, 06, 07 timeframe, and then, of course, the Great Recession, and now we're hitting all-time highs again. And Jelena comes at it from the perspective of having been at a Charles Schwab company since the mid-1990s. So she's worked with hundreds, if not thousands, of financial advisors over that time. So we're getting the perspective of what the firm has been able to do in terms of how they're working with financial advisors. So it was a tremendous conversation, and I want to thank the team at Charles Schwab for inviting me to participate. It was a real pleasure. And now let's listen to 30 years in the advisor business, what the experience to date can tell us about thriving in the future.
I am so excited. We've got a really distinguished panel here today. We're going to have a great conversation about what has happened here in the financial industry over the past 30 years and what we think might happen here over the next 5 to 10 years. So, Stephen, I want to start with you. You got started in this business back in 1980. Tom, you got started back in 1982. And I was saying to someone earlier today, I can't think of a better time for a financial advisor to have started in this business than the early 1980s, because that was the beginning of an amazing bull market from the 1980s through 1999. So why don't you take me back, Stephen, if you would. What was the business like back in the early to mid 1980s as you were getting started?
It was like the Stone Age. I'd get up early in the morning, grab my abacus, jump in my horse and buggy, and drive off to work. But really back then it was all about product and sales and commissions, and there wasn't much in the way of planning. There was no technology really to speak of. I remember getting my first computer, but all it really did was print out illustrations. Financial plans were done manually, and there were no real outsourced partners, and there was almost virtually no thought leadership either.
Right, and there was no internet, there were no phones, you couldn't immediately get instant access to a stock quote. You had your Quotron machine, and people had to call you to find out how something closed or look it up in the paper the next day. So
It was very upsetting when faxes came out and you couldn't say it's in the mail.
there you go.
Because people said, can I have it now?
Right, right. And Tom, how about you? What was the business like for you as you were getting started?
I miss those days where you put something in the mail and say, you'll get it in 3 days, not 3 seconds. I mean, life was a little bit easier. Back in '82, honestly, you could barely give away a mutual fund or a stock. People weren't interested. People were selling tax shelters and product. The highest tax rate was at 70%, those glorious days. And the market was coming off 16 years of basically zero rate of return. Little did we know that we were on the precipice of an incredible bull market run. I just didn't feel that way at that particular point in time. Basically, we are clients from mutual funds. Back then, you had to go through each mutual fund. You'd have to write a check to each mutual fund, do an application to each mutual fund. If you wanted to redeem a mutual fund, you would have to draw up a memo saying, please redeem all full and fractional shares, and then go to the bank to get your signature guaranteed.
Yep, yeah. Things have changed a little bit since then, haven't they? Yeah. Now let's fast forward to 1987. We had a great run from January to August of 1987. I think the market was up maybe about 30% here in the United States. And then we had October of 1987. Both of you were well-established financial advisors. Stephen, why don't you take me back? Tell me, what was it like going through the stock market crash in October of 1987?
It was very uncomfortable. And coincidentally, October 19th, 1987, I'm at an investment securities conference in Hawaii, which certainly didn't make it any easier. And it was a very emotional time for clients. They hadn't seen any kind of drop like that since the early 70s, the 72 to 74 drop. And it was all just emotionally driven, and we really had to be psychologists and psychiatrists and to steward people through the next couple months. The next day was very rough as well.
And Tom, what was it like for you?
Well, again, the week leading up was incredibly rough. Probably the most volatile week we had had since the 70s. And then, of course, that Monday, October 19th, and then that Tuesday, the first hour it looked like we were going into the abyss.
The abyss.
And then all of a sudden, miraculously, we had this little futures that came out of nowhere, turned everything around. But let's talk about communication for a second. I actually stayed in the office until 12 o'clock at night making phone calls. I actually had clients that said, what are you talking about, Tom? You want to talk about the information technology today versus back in 1987? Some people didn't even know what was going on.
Right. Well, and I want to explore that a little bit, meaning, so you had the October 1987 crash, we had the tech bubble in the late 90s, and then the crash that followed in the early 2000s. Then we had 2008, 2009. You guys have lived through all of that. What have you learned in terms of how you need to communicate with clients, both prior to something like that happening and then during that period? So we're setting records in the financial markets as we're recording this. We're going to have another bear market. What are you guys doing now based on what you've learned having gone through these before? What are you doing now to prepare clients for that? And so tell me a little bit about that, if you would, Stephen.
Certainly. Talking about risk is probably the single most important subject when dealing with investments. And when we do enroll new clients in investment programs, we tell them, we guarantee you that these accounts are going to go down. End up.
Well, you can't guarantee in this business, right?
Well, that's one guarantee, which you can get pretty close to, but you're correct. You have to have deep conversations to manage clients' expectations about the future. We all know about the volatility.
Right.
And we also know that people are emotional creatures, so there's nothing more important than communications. So in 2008, after the crash, we changed from quarterly newsletters to weekly newsletters. We had town hall meetings at the local golf club, at the VA, other places, because you have to educate people, you have to communicate, you have to manage their expectations. And it's something that people just have trouble conceiving of.
Now, what is in your weekly newsletter? Is that something you continue to this day?
No, we don't do it weekly to this day. We did it weekly from the end of '08 through March of '09.
Okay.
Actually, April of '09. We kept it weekly. And after that, it was a little too much information.
Okay. Tom, how about you? What are you doing to prepare for the next bear market?
I think Stephen hit the nail on the head. You have to manage your clients' expectations. You know, I love a saying that fear is temporary and greed is permanent. And unfortunately, we've all seen this movie before. People forget about risk-adjusted rate of returns. They want these market returns. And when we're doing goal-based financial planning, we have to just hit home to our clients. It's not about the markets. It's about you. It's about what's good, right by for your family and for you. Not because the Dow or the S&P is up 15% and you're up 8 or 9. There's a reason for that. It's based upon your planning and your goals that we all set out and basically had this plan, completed this plan, and this is your financial future. It's not about the stock market. But as Stephen said, we're all human. And that greed part, we got to tamp that down.
Right. Now, Jelena, you're in a very unique position here. So working for Schwab since the mid-1990s, you've worked with hundreds, if not thousands, of financial advisors and RIAs over the years. Tell me a little bit about your experience from where you sit, all the different conversations that you've had with advisors over the years. What are some key insights that you've learned about working with advisors and helping them be more successful in their work?
I think the key for us has been flexibility. When we talk about advisors, we've grown from a place where we had identified a group of clients that were operating on our retail platform and started to understand that they had power of attorneys on all of these accounts and they were trading them. And that's how we really recognize this as a business opportunity. So to see it grow from that to this place where the industry has evolved in complexity and needs. We have 7,500 advisors, and I like to say 7,500 different business models needed to support them because no two advisors are really alike. And I think that's one of the biggest insights we've seen is we have to create flexible solutions. Otherwise, we're not going to be able to meet the needs of a continuously growing population of advisors.
Mm-hmm. And then how about from a technology standpoint? I think we'll have a nice conversation around this whole idea of technology because as we've heard at some of the different sessions here at the conference, the pace of technology is just accelerating. It's just exploding. And as we think about fintech, financial technology, there's so many new companies that are popping up here. And we've got artificial intelligence, machine learning, virtual reality. I mean, all these acronyms out there. What are you guys seeing from Schwab's standpoint? How are things developing and how are you thinking about technology as it applies to helping financial advisors in their businesses?
Sure, so really for us, we're trying to think about a couple of different strategies that we think are necessary to support the entire industry. One is integration. We need to be able to build APIs and services that will integrate with the variety of third-party technologies that advisors are using today. They don't really want to come to our website and do work there. They want to be able to work in their respective platforms in the most efficient way possible. So we recognize the importance of that integration. It's key to growth. But along those lines, we also know we have a set of advisors. They might be a little smaller. They may not be taking advantage of third-party technology quite to the degree of some of our other clients. And for those clients, we want to make sure that our platforms, our proprietary technology, meets their needs and also will help them fulfill efficiency. I mean, we really believe that technology is going to be the thing that helps smaller advisors punch above their weight class. And so we're looking at both of those avenues as critically important to the future of technology and growth in the industry.
And Tom, as your firm thinks about technology, do you try to position yourself as a firm that wants to be on the leading edge of technology, or are you like, hey, I'll let someone else prove it, take the arrows, and then maybe we'll be a fast follower? Or how do you think about technology?
Outsource. You give me that product. It's just another reason and a way for us to better service our clients and not have to deal with what we started dealing with back in the 80s, doing it all ourselves. There's so many opportunities out here. You just walk through this hall, oh my God, your head will spin. But you have to keep up. And if you're not cutting edge today, I just think that your business is going to just not grow. It's that simple. I mean, from mobile apps to outsourcing the whole data integration that we have, and Schwab provides all the data for our third party, and then they deliver it to us 9 o'clock a.m. every morning. And It's a beautiful thing. It really is.
So tell me about your technology stack. What are some of the different components of technology that you're using? And you can name names here.
I can.
Yes.
Okay.
You can name names.
So we decided basically that I was going to hire a new employee, and that employee's name was Tamarack. And that was going to take care of all of our wrecking the file scenarios, and somebody being out sick and not being able to wreck files, meaning we might not have up-to-date internal files for 3 days. We couldn't do reports. So I decided to make the plunge and go ahead and get the Tamarack. And they have just been fantastic for us, both on the CRM side. The mobile app is about ready to roll out, and we're on the cutting edge because they're on the cutting edge. Right? They're doing all the work. Right? Work smarter.
Now I know some firms look at the CRM system as the hub of the technology stack. Others look at like the portfolio accounting system as the hub. How does your firm view it?
When they can be integrated, it's done. We don't have to worry about either or. It's together.
It's together, okay. Stephen, how about you? What does your tech look like?
Technology has really just been such a godsend to my firm, especially because we're a little bit horizontal, because we also handle pension and employee benefits as well. But compared to 36 years ago, I can rebalance 2,000 accounts in 2-3 hours. 500 families, 2,000 accounts in a UMA platform. We've actually had that for 8 years now and been able to. So we are rather cutting edge when it comes to technology. And Schwab has certainly been the leader in technology for independent custodians. And perhaps more importantly, they really have provided us with such a wealth of outsource opportunities. So between all of these different opportunities, it's just piecing together your strategy.
And what are some of the pieces that you're using in the technology in terms of like CRM, financial planning software? What types of tools are you using?
Well, we've been using Adhesion UMA platform for about 8 years. And that has, when we put it in, it saved us 2.5 employees right away. We use eMoney financial planning software, but what has been a particular godsend is that we use their client vaults. Virtually all of our clients have their own individual private website where we're capturing all of their outside relationships. Our firm is comprehensive wealth management, deep financial planning, so we're really interested in the whole wallet, not just a share of the wallet. So having these tools like the client vaults, the aggregation, the document retention, etc., helps get the whole wallet and helps make the clients extra sticky.
Well, I'm glad you mentioned the vault, the client portal. I'm really curious, what has your experience been in terms of the engagement that clients have with that? Do you find that there's a small percentage of your clients who are looking at it every day, and then maybe there's 60% that maybe once a month, once every 6 months, they're going to log in and check something? Are they using the vault? Are they uploading their important documents and storing them out in the cloud? What kind of engagement are you getting with the portal and the vault with your clients?
Well, you're right. There's a lot of clients who are just plain lazy, or call them the delegator clients. It does take some time and some effort to fully load everything onto your website so that you can use it. So with our larger, lazier clients, we do it with them, we do it for them, and for our millennial clients, they seem to be happy to do it themselves or with our assistance via a WebEx. But once we get them started, or at least get them partially engaged with it, typically that ramps up over time.
And Jelena, this is probably like asking you who your favorite child is, but as you think about the different technology that Schwab is offering, are there some components that you think are maybe really critical pieces of the technology stack that Schwab really pays a lot of attention to? Maybe it's cybersecurity. We've been hearing a lot about cybersecurity and what's going on in that area. Any thoughts on that?
Absolutely. I think really cyber, you're hitting on it as an adjacency to where we're focused, which is digital workflow. And the digital workflow has been interesting to watch it unfold. Started with money movements, right? What safety of wires, a lot of fraud happening in that channel. And as we've been able to deliver some digital workflows through our e-approval functionality, what we see is a really, really secure way to handle that money movement. Now, if we extrapolate that out beyond, there's a lot of different applications for that. And so I think for us, if we can continue to leverage that and show the benefits of it, because it's just like anything else. Sometimes it's hard to get people to try it out, or maybe with the first time people try it out, it doesn't work quite as they thought it might. And it's hard to get people to come back. So I think the big challenge we're facing there right now is just we're continuing to make this investment in a secure platform that allows us to move work through the system in a straight-through fashion that clients love. There's no mistakes. It improves the experience. The account application isn't lost in the back office somewhere. And when we start to be able to tie those things together, both from a security perspective and a client experience perspective, that's when people really seem to want to get in there and adopt. And actually, one other thing I would point out too is just this dynamic where clients, the clients of advisors are more willing now to go online or to set up their mobile app so that they can participate in the authentication of some of these transaction types, which is fantastic because that's not a place that we were at, say 10 or 15 years ago, where we want to mask that experience from the end investor. We're having that participation come in, and I think advisors are embracing that as well as the clients, which makes it all a lot safer.
And how does Schwab think about the make or buy decision? So as you think about building out Schwab's technology, how do you decide, well, we're going to build this ourselves versus we're going to integrate with a third-party solution that's out there?
It's getting harder and harder because of the influx of so much fintech. As you mentioned, as you walk through the conference here, tons of providers. We want to make sure that those providers are good partners in terms of being willing to integrate with a lot of different approaches and platforms. So I think where we're at now is more on the partner front, just because we can take advantage of the quick and rapid development timeframe of a lot of these companies, where internally we're still forced to prioritize between the favorite children. Do we want to invest in modernizing our platform, digitization, integration? We want to do all of those things, and we found the third-party integration piece to be a lever that we can pull and use really effectively.
Tom, I want to ask you, we talk a lot in our industry about trying to scale the business and using technology to scale things so that we can grow faster and be more efficient. But maybe you've had a different experience, but I have never met a client who said, I want to be scaled. So how do you think about walking that fine line between using technology to be efficient in your business and make your business profitable, yet on the other hand, still delivering that human-to-human experience that is valuable and that no technology is going to obliterate? How do you walk the fine line between that?
Well, if you think about this, it's the client touches, right? We sometimes concentrate on things that we really shouldn't, meaning that we can outsource a slice of this, say, we could be talking to 10 clients today per portfolio manager instead of maybe having an investment committee meeting and meeting 2 mutual fund managers. So where do you draw the line? You want to grow your business, you want to be different and unique, value add, if you will. At the same time, let's not forget why we're here. We are here to service our clients. So it's a very fine line. And again, I'm going to go back to the whole outsourcing. Pretty soon, I think 3/4 of our business, except for compliance, will be outsourced, and that will enable us to grow and scale and make sure that our clients aren't scaled.
Okay. So what do you see as if you had to pick one thing where you said, this is the one thing we will never outsource? What is that one thing that is the key for your business that this is core to who we are as a company?
It's that one-on-one interaction. You can't outsource that. And that's the costliest part of your business.
Right. There's no tech, as I like to say, there's no technology that's going to speed up
Robbie the
a
robot
human-to-human
is not
conversation.
going to be you. But that's our unique value proposition compared to Robbie the robot.
Right.
So obviously that is the most expensive part of your business and the one that you can't possibly outsource.
Right. And Stephen, how about you? How do you walk this balance between using technology to make things more efficient, but not push stuff off on the client, like let them do the self-onboarding that used to be done by the advisor? How do you think about that?
Yes, certainly the investment side is increasingly getting commoditized and certainly is scalable. But yes, the client will say, I don't want to be scaled, I'm not a fish. And we do deep financial planning, and you really can't make that fully scalable. You can be as efficient as possible with vaults and software and tech partners, but and we can provide basic financial and estate planning services on a somewhat scalable basis, but not deep and not for complicated clients. It has to be one-on-one. I agree with Tom very much. It's how about the touches with the client. We determine we touch our clients 27 times a year between mail, voice, calls, meetings, etc. But it is a personalized business, and in certain ways, Armand Inverno mentioned at the opening of Impact yesterday, you have to keep it small, meaning small in terms of one-on-one relationship.
Right.
You have to look the client in the eye, understand their fears, needs, goals, and concerns.
Right. I had another advisor, the way he framed it was, there are things in our business that we have to be really fast at, and there are things in our business we have to be really slow at. And I think what I'm hearing is it's this one-on-one conversation. We have to be slow at that because there's no technology that's going to speed that up. And would you say that is the true value of a financial
There's no
advisor?
doubt about it. Your client doesn't want to be just a number. I mean, and we get paid to do what? Service our clients. We aren't selling product. That's what makes us the fiduciary and makes us unique, is being fee only. So, you know, you have a client that's going to sit there, and I think it's managing their expectations. There are some clients of ours, communication once a year, twice a year, I'm fine with that. Other clients, once a month, or any movement in their account, we would call that non-discretionary, that they would expect an email from us before we rebalance. All of our clients are different. Yes, that makes, I know some of our peers look at us and say, you're crazy. The cost to do that is unbelievable. But you know what? Some of our clients feel much better when we have that interaction and that trust. You're building up that trust.
Right. And you have all that notated in your CRM that says this client wants to communicate this way and that client the other way and this person this frequency. And so that's how you're using technology to personalize.
Thank God for that. And, you know, my goodness, for the number of clients that we have today, to always monitor the touches that we have and who gets what and when. Boy, back in the old days, in the Abacus days, back in Stephen's days.
Right. Couldn't do that back in the days
the
of pre-faxes, right? Forget
Yes.
the internet, pre-faxes.
Yeah.
Yes.
Jelena, what about you? You've worked with many advisors, as we talked about. What do you see in other advisors do in terms of how they're walking the balance between technology and the personal touch?
It's fun to listen to both Stephen and Tom on this one, because what we're trying to accomplish on behalf of advisors is exactly what they just described in terms of how they're supporting end clients. We want to make sure that all of the technology support we provide, whether it's in portfolio management, whether it's in digital workflow and opening accounts more seamlessly, it's there and it's designed to simplify that and reduce the amount of time people are spending in that area, because it's not fun, right? You talk to advisors who do an onboarding with us, they're moving hundreds or thousands of accounts at one time. It's a really painful time for advisors that they're going through. It's exciting, but it's also painful because it's fraught with operational inefficiency right now. And as we invest in these solutions, that frees up the advisors to spend the time on the things that they want to do, which is really cultivating the relationship with their clients.
Now, I've heard the word workflow in our conversation. I've heard it in earlier conversations here. How do you define a workflow from a technology standpoint? Is it this happens and then a trigger over here and then this person gets an alert that says you've got to do this piece of the process and that's done and it triggers the next thing? How do you look at it from Schwab's standpoint? And then I'm going to ask you two guys how you look at it at the advisor level, what a workflow means from an automation standpoint.
Sure, so we look at it as capabilities. And when I say capability, I'll use the example of account open. We look at it starting with the client journey from the advisor's vantage point. When they're onboarding a new client or adding an account for an existing client, what are the things that are needed to make sure that that journey goes seamlessly from, okay, we've taken all of this information, we've put it into an account application, We've transmitted that over to Schwab, and Schwab has now got a process in place that automates the data entry of that versus manual input, which can be fraught with errors or slowdowns. And so when we look at that, we don't view the process as just what happens when it gets to Schwab. We view it from the start of the relationship with the advisor all the way through to the successful completion and funding of that account, which we know is what's important. You want to see those assets rise.
That's when people get paid.
Exactly.
Or transfers too. I mean,
Yeah.
Yes.
And Tom, how about you? What does
Yeah.
a workflow mean in your business?
Well, again, the ops, we have great ops team members, and I'll never forget this. I went down to Orlando and I visualized what Schwab actually does for us as advisors. We went down to, our team. We visited our team, and they showed us the onboarding process, and we tried to model our onboarding process after theirs. It's complete onboarding through Tamarack, all bullets. God forbid I get yelled at if something isn't done correctly, but it's all now technology. And then the offboarding, we don't like to talk offboarding, but it happens, and that's the same process. One area that is a concern though during this whole onboarding is transfers. Okay. They can get messy. From all of a sudden some assets aren't allowed to come in to assets that take time to come in. So that's where we have to keep I hate to say keep a follow-up with Schwab, but Schwab is doing their job. We get as many alerts as we can. The alert system that Schwab now has for advisors is fantastic, right? I mean, I don't know if you find that, Stephen, right?
Yeah.
It's instantaneous. It's gotten much, much better, in the past 4 or 5 years. But still, if I can say just one thing, that there's a cog in the wheel when we're going through our onboarding process, it's the transfers from other institutions.
Okay. Stephen, how about in your practice?
Process is one of my 3 most important P's.
Okay.
Process, people, and principles.
Okay.
But that's the only way you can even attempt to become scalable in planning, is to have processes, action sequences. So we use Juncture's CRM, and virtually everything we can think of that we have to do in the office, we create an action sequence. And very often one action sequence will kick off another action sequence. But if you want to have quality control in your office and you want to grow and you want to have additional employees, I'm a small shop, but I have more than 30 employees. If you want to have quality control, process drives it. Critical.
Let's talk about leadership. So both of you are CEOs of your firm. Stephen, you founded your firm. So you went from 0 to, I think you said 30 employees now, roughly. How did you grow from being a young person, starting a business, entrepreneur, to now you're the CEO of a very successful financial planning business? How did you grow into the role of being a CEO? Because I know there's a lot of advisors out there who have I'll call it a practice, who want to move to a business and maybe even to an enterprise. And there's different kind of levels that they have to grow as a leader. How did you grow over time into the CEO role?
Well, I started the company as a sole employee, so I was the CEO from day one. And when I added my first employee, I was really a company. The key is differentiators. And what is your UVP? What is your unique value proposition? So when I started way back it was a sales environment. I wanted to be a comprehensive wealth management firm, so it meant that I needed to learn a lot. So I earned many initials and professional designations. I have 8 professional designations, not because I wanted to collect initials, but because I needed the knowledge. Meaning if I wanted to help people with total wealth management, well, maybe I should be a certified employee benefits specialist and some of the other designations that I hold. Of course, today I have people in my office who know more about all of those subject areas than I do. So being able to give advice in a sales world helped me grow, helped me differentiate. Being able to help clients with not just a limited or subset of their financial needs helped me grow a lot. And I think it's the same thing today, that we're sort of moving to the European model where one firm may help you with accounting, legal, financial, insurance, risk management, etc. So I always wanted to be a one-stop shop, so that was my differentiator, and having a deep bench or the knowledge in different areas aided my unique value proposition.
Now, do you still have personal clients that you work with, or are you more in the full management role?
I have a small number where I'm the lead planner.
Okay.
All of our clients receive a team with a lead planner, a junior planner, a portfolio manager, and a client service person as well.
Okay.
But yes, I never want to get out of it. I love planning.
Right. And how about you, Tom? Do you still have personal clients that you work with?
Oh, yes.
Yes.
We're team approach, but I will be the lead portfolio manager on a number of clients. I've had some clients for 30, 35 years.
So how do you run the firm and then also have clients that you
that's
deal with?
when you cross the Rubicon.
The Rubicon.
That's when you
Okay.
wake up and you say one day, I don't want to just be an entrepreneur, I want to be a corporation or a company. And by doing that, you have to find people, A, that you can trust, and more importantly, that you can wake up in the morning and feel comfortable delegating. Because if you can't find those two, forget about it, right? You will be an entrepreneur. I think I hit that wall about 400 million, when I had $400 million in assets, maybe 500 million. When I reached out, I got a COO, takes care of everything, makes my life much easier, so I can go ahead and concentrate on what I love to do best.
Right.
And that is deal with clients each and every day. I love it, and I think I'll be doing it well into my 80s.
Now tell me about
90s.
Tell me about your strategic planning process. A, do you have one? Do you do like an annual strategic planning meeting with specific objectives and strategies?
Always.
Okay.
So
tell me how does that process work?
We're goals based. Every year that we'll have our staff meeting, and we're going to lay out our goals for we're about ready to do 2018.
Okay.
But before we do that, we go back and take a visit to 2017 to see, hey, did we obtain our goals? How did we do it? And if we didn't do it, why? And we're all as one team. And Stephen's like this too. You can be a corporation and still be that entrepreneurial thought process.
Right.
And by doing that, you get everybody involved. I'm a consensus guy. I like to get ideas from my team members, and I like people that say no to me, and I don't just need yes people. Mm-hmm. And that's how you grow.
Yeah. And Stephen, do you have a formal strategic planning process and budgeting process, or how does that work?
Yes, very similar to what Tommy mentioned. And we do it in our management team first, and then we roll it out to the entire firm. We want everyone to be on board and everyone to be rowing together.
Okay. If I may say one thing too, Schwab has been wonderful in this aspect that they have come into our firm and drew up a whole strategic plan for us. It's a very unique service that Schwab has to offer, and we got a heck of a lot out of that. Mm-hmm. I'm not sure if Stephen's gone through that, but that is another service that Schwab brings to the table.
Schwab has a really, I'm not trying to get a job with Schwab, but Schwab really has a lot of tremendous tools to assist all of us with practice management. I've gotten tremendous value over the years from, yes, their guidance on strategic planning, and there's so many other areas we don't have enough time to even discuss today.
Yes.
And Jelena, you've led teams for many years. How do you think about leadership?
I think about leadership in a couple of different facets. One, it's about making sure that you uncover the true need and the true things that you're hearing. It's our job to really be change agents, and sometimes that means helping advisors change because there's maybe a better way, or sometimes it's about helping our employees change to make sure that they're evolving and that the support that they're providing advisors is growing right along with the industry. So I think being a change agent is critical. It's really hard. There's always people who want to slow down. They're not really on board, and you have to do a great job as a leader of bringing everybody along, making sure they've got that awareness and that desire to go on the journey with us and build that enthusiasm. It's so critical as we're trying to change so rapidly. And then I think the other thing that's so important about leadership, and the thing that I've tried to embrace, is always have a natural curiosity about the world around you. Don't just focus on, this is my job and this is the part of it that I do or that I own. If you take that broader view, you start to learn more about the other functions. You have a lot more understanding for what other people are facing when you are trying to navigate that change that I was talking about. So being a real student or a steward of the business that we're a part of has always led to greater leadership.
And I know culture is critically important for any business. And we've heard the old saying, culture eats strategy for breakfast, lunch, dinner, dessert, pick your mealtime. How do you think about culture? I want to ask you, Jelena, and I want to ask you two gentlemen in your businesses, what's the importance of culture and what do you do to try and foster the culture so that everyone is moving in the same direction and it really becomes a differentiator for the firm?
Culture is one of the things that keeps people at Schwab as long as they are. It's funny, I just hired a new gentleman who joined us from another part of the industry, and he commented to me last week that every single person he's met has been at Schwab at least 10 years. Many people have been there for 10, 20, 30 years, and it's because of the unique culture and the fact that when we talk about our value proposition, which is doing right by clients and always putting the clients first, we mean it. We stand behind it. It's not just words on a piece of paper. Everybody from the individual leaders in our organization all the way up to the CEO, they live it and breathe it every day. And so it's an easier culture, I think, to be a part of when everyone is really aligned around something that's bigger than themselves.
Right. Well, and I heard Walt Bettinger this morning say, we don't set goals. I thought, well, that's interesting.
Yes,
As he was talking about the intelligent portfolios, someone would always ask, well, what's your goal? How many billions do you want to have under management? And he said, well, we don't really think in terms like that. We create a great product that we hope is great and we put it out there and then we iterate as need be. So maybe that's part of the culture too.
Exactly. The iterative process is important, and it goes back to what we talked about before. That one product isn't going to meet the needs of all of our clients, so we like to put it out there, put it in the hands of users and test and learn, and get that feedback so we can change it more quickly.
Right. And fail fast and keep
Absolutely.
going. Stephen, how do you think about culture in your firm?
It's probably the single most important element. It's our heart and our soul.
And if I were to ask you, what is the culture of your firm? How would you describe it in one sentence?
You could ask any staff person on our team, and if you said, what's the briefest description of culture? It's always do the right thing. We do very deep personality testing on all prospective employees.
And do you use like a third-party assessment, or what do you actually use to do that type of testing?
What we do is we use an exceptionally good consultant who uses both the Myers-Briggs and the PRFE. And to me, just the Myers-Briggs is not helpful. Just the PRFE is not useful. When you put those two tests together and you have a good consultant, they can really draw a wealth of knowledge about it. We also believe a great deal in Paul Lecione's book, The Ideal Team Player. Be hungry, humble, and have emotional intelligence. But we do the personality testing because we want to have the right person in the right position. You might do a Myers-Briggs personality test and it'll say this person pays a deal of attention to detail, and our consultant will say, no, not that person for that job. They're excessive compulsive. They just won't fit into that job. As far as culture, Tommy and I both make lots of lists, top advisor, or top pension consultant, et cetera. And to me, those mean you're credible. It doesn't mean you're tops, means you're credible. There's one that I'm very proud of, though. 4 years ago, we applied for best places to work in New Jersey. So the last 4 years, we were number 38, 25, 15, and 11 in New Jersey.
Is that North Jersey only?
No, it's all of New Jersey.
I sense a little rivalry. Both of you guys are from New Jersey.
It's actually NJ Biz puts that out. Although I understand we just participate in Investment News Best Places to Work survey. But that really tells me a lot, because we can't and we don't say one word to employees, And it really tells us everyone's on board, everyone's rowing together, and they appreciate their environment, they appreciate our culture. We are a rather giving employer. It's not just free golf lessons for everybody and your birthday off. There's many other elements that go into the equation.
Tom, same question. One sentence, how would you describe your firm's culture?
You never go wrong by doing what's right 100% of the time. And it's that simple. That's our culture. Our culture is one of service, culture of service and culture of compliance. We can't forget about that, because it sometimes unfortunately feels like we are a compliance firm that manages money. That's where we've gone right now as far as compliance. And that's become culture is so very important, but the compliance culture is like number 2 right now. Is so vitally important in today's world. Client service, culture of client service, culture of compliance.
And how do you reinforce that culture so that people never forget it and they continue to exhibit it?
So we have our SEC committee, and our SEC committee meets once a quarter, and we invite at least 2 staff members.
Your
into
SEC
committee.
What is SEC committee?
That's our basically compliance committee.
Okay.
That we call it our SEC committee, because there's oh my God, your head spins with all the compliance information that comes out, which, by the way, I'll stop here with all the Schwab accolades here, but boy,
this is a Schwab love
their
fest.
compliance, what they come out with, I think it's a monthly compliance, it's just amazing information that we basically digest. But what we do is we bring at least 2 staff members into that SEC committee meeting. And then at the end of the year, we all have our staff meeting and we talk about all together compliance issues, so that we have that culture of compliance.
Okay. I want to talk a little bit about the client experience. Another thing that's really popular in our industry. So we've got the companies like Amazon and Netflix and those types of firms and Starbucks that are really creating a nice consumer client experience. And so we're all thinking that as financial advisors, our clients are expecting a similar type of experience, because those firms are setting the bar high, so we can't drop it. So Jelena, let me ask you, as you think about client experience and you're working with financial advisors, what are you seeing across the industry that advisors are doing in terms of creating an outstanding client experience? And let me begin with, though, how do you define client experience?
I define client experience, and we think about it a lot on our team because that's our job. We're client experience people. But we really define it as making sure that from point A to Z, or however many permutations of that happen in the midst, that we're thinking about it through the lens of what is the client experiencing. We're not looking at it from, if the client wants that, it's going to be really hard for us at Schwab to deliver on. We're really looking at it more from that perspective of, hey, this is what the client needs, this is what they need for it to be successful, whatever it is, if it's a process, if it's a transaction, you name it, that's how we try to think about it. Because if we don't put ourselves in the shoes of the advisors and their clients, likely we're going to fail in our solution attempt because we haven't thought about it the right way.
Have you seen some examples of financial advisors that you've worked with that you said, wow, you have an amazing client experience process?
Yes, and interestingly enough, recently a lot of that has to do with technology. So we've been talking a lot with some of our advisors about the client portals that they leverage, and I know Stephen mentioned their client vault. It's really important anymore to be able to really pull all of that entire financial picture together for clients. And some of the most successful advisors I've seen have done a really, really tremendous job of making it seamless for their clients. Meaning they don't have to remember 4 different passwords to access all of these different things, but they have one single sign-on integrated that allows them to access everything they need to see about their entire financial picture. And that's something that we've seen a lot of really successful advisors do to drive client experience. And interestingly, it's digital, right? It helps support the relationship and that in-person conversation.
Have you seen non-digital examples of client experience? Maybe advisors creating communities with their clients or interesting events that they're doing. I know I recently spoke to a financial advisor on my podcast who would do mindfulness meditation workshops and invite clients to come in, or there'd be a big speaker coming to town and they'd invite their clients that they knew would be interested in this type of speaker that may not necessarily be mainstream. and have them go. Any examples that you've seen along those lines?
The best example I can think of is an advisor in Arizona who put together basically a subset of clients who are part of a wine club now.
Yep.
But it was just a thing that they all had a very shared interest in, and so they bring in different winemakers to talk about their process, and it creates a good atmosphere. I think that's just one example, but by leveraging your CRMs and all the information that you've got on the clients after you've built that relationship, you can start to customize and go into different areas, which is, I think, the power of all that data that can start to be harnessed and bringing together like-minded clients.
Stephen, how do you think about the client experience? What are you guys doing that you think maybe separates you from a lot of the firms out there?
Well, I don't know that we do so many things that are a lot different. We certainly do a lot of technical seminars, Social Security, Medicare, other, the ACA, Medicare Act, Medical Act, and we'll do fun things like a wine tasting. And then we had the woman in who does a TV show on the antique road warrior, and we had our clients bring in their antiques and their tchotchkes, and she was there to tell them they're not worth anything unless they're baseball cards or metal trains. But I don't think that really drives the client experience. Meaning, number one is clients have to have the comfort level and get the information they want easily, quickly, in a format that they understand. So having these seminars and client events are nice support and supplements to that. But as you say, it's all about the client experience. And I agree, if I had to pick one thing that improved client experience more than anything, it's having them fully engaged with their client vault or portal. So that gives them peace of mind, being able to see their mortgage balance every day, the cash value in their life insurance every day, of course all their investments and everything else that goes along with the vault, and being able to pull their documents in time of need. Even just telling the story about the client who lost the passport in Europe and went online and printed it out in color. Sure, they had issues, but not like if they had nothing.
Now, let me play devil's advocate for a minute. We have this technology, clients can get on their smartphone, they can look at their balance, they can see how much their account went up or down today. We've all seen the studies that show the more frequently you look at your portfolio, the worse your performance is, okay?
Too much information.
So how do you strike that balance between, hey, we want to give you all this so you can see everything in real time, versus, now don't look at it because then you're going to be calling us and you're going to panic.
But we
How do you do that?
monitor how frequently the clients do go on to the various portals. Meaning some of our clients go on eMoney to look at their account, some go on our investment platform to look at their account, some even may go to Schwab, but we get to see how often they're visiting the website, how often they're looking at their account, and when we see someone's looking a lot, we know that we need to talk to them and find out what's on their mind.
So we're getting to the point where we've got predictive analytics
Yes.
that will know, okay, this person is checking it like 3 times in the past 11 days. There's an 80% probability that they're gonna, want to, move half their money to cash within 3 weeks or something like that.
Or they're nervous, or they need some hand holding.
Right.
We never know why they might be.
But Stephen, I mean, the problem here is, let's be honest about the portal. We touched upon this before. The integration with Money Guide Pro, we now have the Yodlee. We had our portal is, quite frankly, second to none, I would say. How many clients actually utilize it? And that's the big issue. We can monitor. Stephen brings up a great point. We got a handful of clients that are looking every day. Hey, guess what? That's information for us now that we can go ahead and contact our client or be a little bit more hand-holding. But the problem that we have is that we can't monitor how many times they go on Schwab's website to check.
There's an opportunity.
And if we don't know, if the majority of our clients, unfortunately, don't go to our portal as many times as we would like, or even, they access it one time.
Well,
they love it, and that's it.
Well, what do you mean that you want them to? Because we just talked about maybe the more frequently they look at it.
Yeah, so we have our group of clients that are, Steadfast portal, Meyer Capital Group portal investors. The other part, the other 3/4 or whatever, probably on Schwab. They tried our website, they took a look around, cruised around. Even when we did the financial planning and everything's uploaded every day, to Stephen's point. But guess what? They gravitate back toward Mother Schwab.
Right.
Well,
And I don't know if you found that, but I mean, have you done a in-depth study of a percentage of your clients that are actually go to the portal one time, click around, peruse, and never come back?
yes, we do. I mean, we know that our clients fall into two camps, the delegators and the validators. And we certainly like the delegators more.
Right.
And very often the delegators, yes, they've delegated, and if they're comfortable, they don't come into the office as often as we would like. They don't look at their accounts as often as we would like, but it's nice to have those tools when they do come in, or we do a WebEx or a Skype, that we can pull up the client's portal and show them anything or everything about their life. And them just knowing that it's there and accessible, I think serves to keep them happy and calm.
What's a exceptional
safety
client
net.
experience is what it is what it comes down to.
Well said.
There you go. Well, I'm going to share something with you three that very few people know, and that is that I have the ability to grant a superpower to you three. So the superpower is that you have the ability to predict the future. So I want to ask each of you, what do you foresee evolving in our industry over the next 3 to 5 years? I know earlier this morning in one of the keynotes they were talking about 10 years in the future. Let's talk 3, 5 years, 10 years. I'm going to start with you, Jelena. If you put your crystal ball in here, your magic 8 ball, what do you see evolving in the industry? What do you see financial advisors, what should they be thinking about to position themselves to really thrive in the years ahead?
We started to go there a little bit with the predictive analytics, but I think that the power of data, patterns, all of those things will collide and actually create an opportunity for advisors to maybe be even more proactive than they already are. So I think that's a huge opportunity. I think augmented reality is interesting too, only in terms that it could extend the reach of the advisor. I think it's always a balance because of that personal relationship we've been talking about. That's really key to the trust that clients have with their advisors. But if there's better or different ways that we can touch them and access them and create a feeling like even we're together even though we're really not, that's interesting. It's really interesting to think how it could impact the speed of the evolution of the industry.
And Tom, what about you? What does your crystal ball say?
I think that you're going to have the continued breakaway brokers change the complete landscape of the old dinosaur brokerages as we know them today. We used to be the disruptors in this business, and now we're getting disrupted. Not a good feeling. We had it for 30 years, Steve.
It was a great
It was
run.
a beautiful thing. But I think fee compression is something that we're all going to have to deal with, and you better have a very efficient, lean, well-run machine in the next 3 to 5 years. When the markets finally do break and we have that inevitable correction that we know is going to happen, I think the Robbie the Robot portfolios of the world, I think all of a sudden human advice will come back into vogue.
Now, you mentioned fee compression. Is it fee compression or is it margin compression? Because if you look at the data's saying the average fee is about 1%. That hasn't budged a whole lot, but margins may be compressing because you're going to have to deliver more services for that 1%.
So now you're getting both.
You think there's going to be both?
Oh, it's going to happen. There's just no doubt about it. And those surveys, I'm sorry, they lie.
Okay.
Okay, I am telling you, fee compression is here. Our clients are getting...
Jelena, let's make a note of that for the next Schwab benchmarking survey.
Noted.
I love the benchmarking survey, but sometimes I shake my head and say, you're out of your mind. Because, look, you know, I can see the forest for the trees, okay? And I know what's out there.
Are you seeing your fees come down?
There's no doubt about it.
Your clients are asking for discounts?
High net worth clients are getting so in tune now to the fees that they're paying. Now, grant you, the value added that we bring to the table is second to none. I'll say it again, okay? But when you're in Vanguard's backyard, guess what? It's all over the place. And we have to get paid for our services, okay?
Right.
Everyone deserves to be paid. And the bottom line is that you got to come to that equilibrium that everyone's happy. But it's more so than I've ever seen in my 35 years.
And Stephen, I'm going to ask you about the crystal ball, but since we're talking about the fee issue, let's go with that for a second. Are you seeing that in your business, fee compression, or?
I know it's going to come in all of the commoditized areas, meaning in the pension 401k area, there's been fantastic fee compression. I mean, just no one would have imagined how much fees have fallen in 401k plans, so because it's very much commoditized. So I think on the pure investment side, we're going to see more of that in the future and spill over to the retail side, but not for the planners who are delivering a lot of planning.
And what I see a lot of firms starting to do is they're disaggregating the planning fee from the investment fee. So maybe they're saying investing, we're charging 30 to 50 basis points to be competitive with the robos, and then we're charging $5,000, $10,000, $15,000 a year for our planning services. Are you doing that in your business, or do you anticipate doing something like that?
We are doing both. We have also started to use flat dollar fees for large clients, for our largest clients. And that's something which has also happened in the 401k world. About 5 years ago it started. Instead of basis points on AUM, flat dollar fee. So we are already doing that with our large clients. We're experimenting and doing that with our emerging clients. But this also reminds me of one of the best sessions I had at Schwab Explorer a couple years ago. We took half a day, and this is scary. The subject was, it's the year 2025, and
there was a song in the year 2025.
Right.
2525.
Well, I hope it doesn't happen until then.
Zager and Evans.
It's 2025 and Apple comes out with wealth management. What does it look like? And after a half a day of brainstorming, I think you were there as well, the conclusion was that they would come out with 13 different client service models, or more than 13. So I see that we're going to have to customize our service offerings more for people in the future. Not just delegator and validator, but 13 different flavors
But
so.
Stephen, you know what? Another key point is that we forget as advisors, and on the planning side is important. But we basically are helping our clients in everyday life decisions. Whether it's buying a car or leasing a car, or selling a business or buying a house, college education, that's all part of the fee. There's no additional fees on top of that. And we're not like attorneys, and you could call us 10 times about whether or not you want to buy your car or lease your car. That's all part of our service, and sometimes I think we as advisors forget to promote that as much to our clients and make our clients aware of, we're here, we're taking a seat at the table with you on Thanksgiving, for the Thanksgiving meal. Remember that. We're here for you 24/7.
Right, yeah.
Well, we too are so extreme with the service. Recently, a retired 83-year-old chief medical officer's wife got ill. He didn't need the second car, wanted to sell it. He said, we're not letting you sell that car. We're not letting strangers come to your house and perhaps rip you off. We had him bring his car to our office, and we had one of our team members out there every time he showed the car, and to make sure he wouldn't take a bad check. But nevertheless, the initial planning can be so exhaustive that we do charge planning fees for initial financial plans, generally ranging from $5,000 to $10,000 as a one-time fee.
Yeah, that's looking into the future. Looking into the future, 2025. Look out for that one.
Well, the thing is, when you're doing,
well, you won't even be in business by then. Yeah, you will.
Thank you for predicting such.
Yeah.
But meaning, before a client goes to the attorney to do their estate documents, we've already created an estate outline that does 70% of the documents, hands all of that to the attorney on a silver platter, so the client gets two heads instead of one, and the attorney's fee is greatly reduced. So there's lots of ways that we can demonstrate as planners, as advisors, how we can add value and how our services are worth additional fees.
Well, I could spend hours and hours talking to you three, and I know we're going to have to be wrapping up here, so I got a couple more things that I want to do here. So one is, I want to give each of you an opportunity to share an insight, a thought, reflecting back on all your years of experience. What maybe it's a lesson learned, maybe it's an insight, maybe it's something that you want to share based on what you've experienced over all these years that you think can be really helpful to all the folks listening to this. So who would like to go first?
I'll go first.
Tom.
So thinking back, and I just marvel at the fact that I was at the front of a revolution to make people's lives better in a fashion that is always number one for the client and always will be for the client. Coming from an industry that thrived on, I gotta be careful when I say this, taking advantage in some cases of clients because they had proprietary research. They had this, they had that, and they had hidden fees, and the clients didn't have a clue what they were really paying. And I think when the internet came about, it changed everything. There wasn't proprietary anything anymore. And that changed for the good of the American investor. And for me to be part of that, it makes me feel warm inside. It really does, because my grandfather taught me from day one what a fee-only investment advisor does. And for years I was laughed at and scoffed at by my broker friends saying this model would never work. And then further on, when Schwab came in, the Schwab model will never work. And now the beautiful thing is they want to be like us.
Right.
And I feel damn good about that.
Imitation is the sincerest form of flattery.
That's right.
That's right.
Tom, I think that was very well said. I echo what you say, and every year at our holiday party, we do talk, the whole team, about the different kinds of people that we've helped over the years, over the prior year, the tragedies, the successes, etc. But I don't want to duplicate what you're saying. I agree with you completely. If I had a few tips to share with other planners, I would say, one, don't underestimate the potential of the junior staff. You can transition your clients to junior planners, like I did with 350 of my client families several years ago. Also, embrace your peers. I started a study group many years ago, went 10 years, with I mailed to all the attendees of Schwab Explore conference, and 10 peers from around the country said, yeah, we'd like to work together, we'd like to learn, we really don't feel like we compete with each other. So I think there's a wealth of knowledge there to embrace from your peers, and we can all learn from each other, because every shop is a good bit different. And for the youngsters, I think in the future, and the seasoned firms, you have to think about how you're really offering value, not just a commodity. So if you don't have the expertise in-house in these other areas under investments and financial planning, you have to outsource it or bring the people in. But you're going to have to determine how you're going to really add value in this commoditized world.
Being something of an accidental tourist in this industry, I felt like I'm incredibly lucky to have fallen into this, because working with the types of clients that are here today, Tom and Stephen, it's so rewarding to see everything that they're doing for their clients, and to really stand by that promise of being a fiduciary and a trusted advisor for their clients. So it's really fun to be a part of that. But I would also say that in terms of the industry, I think we all have an obligation to pay it forward and make sure that we are doing our part to educate people about how great the industry is, particularly being a woman in this industry. Really want to put in a shameless plug for women in the industry.
No shame about it.
It's a great career, and it's incumbent upon all of us to make sure we're really out there educating about the benefits of it and the flexibility that it really does provide as a great career option.
Excellent. Well, we're going to finish with 2 questions for each of you. These are going to be rapid fire questions. So the first one, I'll give you a second to think about it, is I want you to think about one book that you would recommend people read. So for listeners in the financial profession, what is one book that you would recommend that they read? And then I'm going to have an individual question, a second question for each of you, where I'm going to start a sentence and I want you to finish the sentence for me. Okay? So let's start with a book. Who's got a book that they would recommend?
It's a nice thin book. It's only a 45-minute read. I know, because it only took me an hour and a half. The Ideal Team Player by Patrick Lencioni. It's his newest one. Everyone should read all of his books.
He's got a lot of them.
But his newest one, or The Advantage, the one before it.
Okay, excellent.
I'll tell you, I'm more on the history side of books. But I want to say one thing. I'll call them the rags that we get. I get so much great information from the investment news and the financial advisor magazines. Rather than reading a book, to me, there's so much information in there that can help you and help you grow your firm. Right. I never thought I would say that.
Right. Well, so let me name a few. Financial Planning Magazine, Financial Advisor Magazine, Investment News, wealthmanagement.com, Journal of Financial Planning. Did I miss any? Some of our
just fantastic,
some great ones there.
Actually, there's one inside information.
Bob Varies.
Yeah, what I like that he does is he sends out a media summary. He reads all those magazines and picks out what he thinks are the best articles and gives you a summary, and then you can read the whole article. So that is just very efficient for me if I don't have the opportunity to read all 10 magazines every month.
Right. And the quick hits on the internet now. I mean, on the I'm thinking Barron Advisor Lab now, they come out. Quick hits, easy to read, first thing in the morning, get your coffee, and just some interesting reading about where this industry is going.
Excellent. Jelena, what's a book for you?
Beautiful Constraint. It's a great book that talks a lot about how we solve challenges in a different dynamic, and it's all about can-if thinking. We can overcome this particular obstacle if we approach it differently. And when we're ideating, sometimes with a lot of constraints in our atmosphere, it's a great breakthrough thinking book.
Okay.
Oh, and don't forget that bestseller, The Little Engine That Could.
Awesome. All right, so I'm going to start a sentence and I want you to finish it. Jelena, you're on the hot seat here. So your sentence is, the best way to accelerate personal growth is...
to make yourself really uncomfortable.
Excellent. Tom?
Lose your comfort zone, right?
What I know to be true is...
that I'm not always right.
I'm shocked.
Did your wife tell you that? Or?
No, my COO told me that.
Your COO. And Stephen, the hardest part about leadership is?
Of making the hard decisions.
Excellent.
Stop. That's all you
right
have to
there.
say.
All right.
You were about ready to say something, Steve.
No, it was a tickle.
Excellent. Well, folks, this has been tremendous. I really appreciate the opportunity to spend some time with you today. You've shared some tremendous insights, and all three of you are a tremendous credit to our industry. You've been around this business for a long time. You're shining lights for our business, and I really appreciate the opportunity to have you on the show today, be able to share this with all the listeners. I thank you for everything that you have done and everything that you'll be doing going forward.
Thank you so much, Steve.
Thank you very much,
Thank
Steve.
you, Steve.
Thank you for listening to Between Now and Success. Hey, if you want to continue to hear these great episodes on the podcast, I'd really appreciate it if you could do a couple of things. First, tell all your friends and colleagues that you think can really benefit from listening to this podcast. Let them know about the show. You can even help them subscribe to the podcast by pulling out their phone, pulling up their podcast app, searching for this podcast, Between Now and Success, or you could just search on my last name, Sanduski, Sanduski, and look for Between Now and Success and click the subscribe button. So that would be a big help, number one. Number two is to go to iTunes and leave a review. So you can actually give this a 5-star review if you think it's that good, which I'd appreciate. And you can also write a review of the show. That helps other people find the podcast and helps us continue to grow. So appreciate all your help in that area. Appreciate you being a listener. And if there's anything that I can do to help you, please let me know. You can visit us at belayadvisor.com. Thanks, and we'll talk to you on the next episode.